Well, we're looking at the economy. We're looking at a very strong economy, strong fundamentals, and we're adjusting the policy stance. We've been doing that gradually, increasing rates. We've been moving up. We're targeting 2 to 2.25% right now. I kind of think neutral is in the 2 3/4 to 3%. So after many, many years of accommodative policy, which I have supported strongly because inflation is now up at 2%, it's time to readjust the policy stance, at least to neutral. Let's see how the economy is performing at that point, and then we might have to do a little bit more after that.
So let's do the math. Neutral, you're at 2, 2.25 now. You think 2.25 to 3 is neutral. So that's 3 more hikes from here to get to neutral.
That sounds right.
Right? Okay.
Yes, by that measure.
Correctly?
By that measure.
I don't like doing math live in the morning on air. And then do we have to go to a restrictive policy, you think, at this point?
So I would say that my forecast, which has growth above trend, this year, 3.2%. Next year, 2.5%. Year after that, maybe 2.2%. That's above trend, and I expect the unemployment rate to fall to 3.5% before it eases back up a little bit. This is an environment where I'm not worried about inflation. I think inflation could go to 2.2%, 2.3%, and that's easily consistent with symmetric 2% inflation. But with unemployment like that, setting policy ever so slightly restrictively makes sense, and we could hold at some measure like that for quite some time until we get exactly is not the right word, until we get outcomes really consistent with our dual mandate, which at the moment we just want to maintain this.
So what does restrictive mean? Does it mean 1/4 point above neutral? Does it mean 2/4 points? How many quarter points above neutral?
I've said in past public commentary that I kind of think of maybe 50 basis points above neutral. Now, you have to remember there's a lot of uncertainty about neutral. We have different opinions about what that is. There's even different measures in terms of short-run neutral and this longer term that's in the SEP. So we might have to sort of feel our way around that a little bit. But I'm going to be looking at how inflation is performing and the momentum in the economy.
But, I mean, there's 2 aspects to the president's comments. One is the rhetoric, and we can get to that in a second. I do want to get to that. But the other is the substance. And he's not alone in criticizing a lot of what you just said, which is you're going to be raising rates, and your forecast is to go above neutral in the absence of any clear and present inflation danger. How do you justify that? If inflation remains quiescent, why do you keep going above neutral?
I was in Flint, Michigan on Wednesday, and I was asked a very similar question, and I sort of said exactly what you said, which is it's a fair question to ask, do we really need to increase rates? Do we need to increase them as much as some people say? This is what the policy debate is, and I would say that with the unemployment rate headed to 3.5%, we're in a more normal environment where an accommodative stance of policy, when we've got pro-cyclical fiscal policy and a very strong economy, we probably need to be a little bit on the above neutral side. But I don't know that we need to be a lot. And as we continue to raise rates, we're going to be data dependent and look at how things are playing out. And if there's some break in how our outlook is inferred, then we would do something a little bit different. But at the moment, it looks really good. Fundamentals are strong.
You mentioned the pro-cyclical policies. There's a certain irony here. A president who's complaining about interest rates going up. How much of what you're doing on policy right now is because of presidential policies, which have improved the economy, but also perhaps created strains on interest rates?
Maybe it's. I don't want to get bogged down in a whole lot of rhetoric and commentary. We're looking at the state of the economy. It's certainly the case that we have been dealt tax cuts, which are strongly improving consumers and businesses. I mean, I think that's probably worth 4/10 to half, 5/10 on growth this year and next year. So it's definitely added to that. This is coming, though, at a time when the unemployment rate is below many people's measures of the sustainable rate of unemployment. Now, I think this is a good thing at the moment. I think it allows more people to come into the labor force, increase their attachment to the workforce, and have a longer permanent effect, potentially, on that. But having said that, at some point, we might see wage growth. I'd like to see it higher. We might see it a little more in line with stronger inflation than would be ideal. So we just have to understand that process.